Perfect. And you'll start thinking about what kind of questions you might have, either about strategies, programs, marketing build outs, anything you can imagine for real estate investments.
Yes.
All right, my friends. Don't realize how many team legacy groups we have until you try to find them on Facebook. Okay, let's rock and roll. See if I can make you the view of speaker. Okay, Quinn.
Okay.
All right, my friends. So I would like to introduce to y'all Quinn. He is 25 years old. So I love all the young entrepreneurs on here. We're going to ask him a few questions about how are you so determined and focused at such a young age? This is his almost third year. He's two years and some change. He joined the lending world July 2020. And so far he's done 60 million in production. So he really hit the ground running. Quinn, I would love for everyone to kind of get to know you. Tell us about you. How did you get into lending? You know, a lot of agents here are going through their first year. What did your first year look like? And a little bit of.
Yeah, absolutely. So yeah, thank you for having me on, Amanda. Again, I'm super happy to be here and talk to you guys. Yeah, so I got started in the mortgage industry in July of 2020. So right after the lockdown of COVID, I actually got licensed during the real lockdown of like April and March. I graduated college in December 2019, moved home and was gonna start working in the music industry because that was what my degree was in. But COVID hit and the music industry, specifically the live industry, which is what I had an interest in, was dead, dead in the water. Who knows how long it was going to be. So my mom, Shelly Taylor, who you guys know, Amanda and Jeff have a good relationship with her. She was out for drinks with George Temple, who is the president of OVM Financial. And they had worked together a lot, they'd done a lot of deals together. And my mom was just talking about me and she was just bringing me up and he was like, hey, let him know if he wants to get his LO license. If he's a hard worker like you, I'd have a good little LO on my team, let him come in and talk to me. So at first I was like, oh, that sounds weird. Like, what is that? And then I thought about it some more. I talked about it some more with my mom and I went and spoke with George and I was like, this actually makes sense. And I feel like I could do something with this. So I went ahead and got licensed during the lockdown. Every day when everyone was, on Zoom and talking and watching TV, I was up there studying and learning about the industry. And I grew up with realtors. Like I said, my mom was a realtor. My dad is one as well. And my uncle is a realtor. And my grandma was one. So I had kind of grown up in the industry and learned how it works. I learned you got to be available on the weekends, weeknights, you're available when the client's available, not when you necessarily want to be. So I kind of already had that in my head. And then I took the test, the very first official LO test that had opened back up again after things were starting to open at the end of May of 2020. And miraculously, I passed it, which is kind of rare for people apparently to pass it the first time. So then I shadowed for a month with Ronnie Collins, who's like George's secondhand woman. She's kind of like the brains of the organization. And she taught me, I just sat at her desk for a whole month and asked her questions. And I wrote down so many notes and then got licensed. That was during June. I got licensed at the end of the month, fully did my background test and started in July, kind of dove right in. And I closed, I think I closed like 2.5 million in July and went on, for the rest of the year in 2020. If you guys were around, you remember it was pretty crazy and kind of averaged around like 4 million or so each month, which was pretty cool. Yeah. And then I think the most I did in November was like 6.5. November 2020 was kind of the top. That was pretty good. It was just a really interesting thing where I just hit the ground running where it was already super busy and there was already a lot of contracts coming in, constantly. So once things started to slow down towards the end of 2021 into 2022, things started to cool off a little bit. That was an interesting time for me because I kind of had to pivot and focus more on meeting more realtors, meeting more buyers, following up a lot better. That was a learning experience for me because I started to see, wait a second, the times aren't always going to be like this, so you got to plan for the future.
I feel like
So yeah, that's kind of my story real quick.
I love that. I feel like half of the realtors on this Zoom can relate to that. Got in during COVID, wham,
Yep.
bam, man, found a mentor, jumped right in, and now they're like, wait, okay, now this is what traditional real estate looks like, and now I need to shift and grow. And
Exactly. And when the
that,
rates, were 2.75, 2.6, you never had to have a hard conversation with a buyer about the rate. When they got up into the 5s and 6s, I was finding myself having to plan for that conversation a little bit more, because people were used to that 2s and 3s, and now all of a sudden it wasn't. So
right.
that was another learning curve for sure once that changed.
Since you've had both perspectives of being surrounded by realtors, hot market, now leveling up balanced market, what is the biggest mistake that you're seeing realtors make in this current market? If you could give all of these people one piece of advice, don't do this or please do this, what are you seeing?
Sure. Yeah. Okay. Something I would say for that is pre-approvals. Okay. A lot of realtors want that quick 30-minute, or an hour pre-approval for every single person. And there's going to be some buyers that are easy like that, and that you can pre-approve very quickly, 30, 40 minutes, send the letter, done. A lot of times though, and I like doing a little bit more checking. I like to get some pay stubs, a W-2. Sometimes it'll take another day or two for me to send the full letter. I'll always give numbers at first. I'll be like, here's what he's saying his income is. Here's where his credits and debts are. I think we're going to be here, but let me just get these pay stubs first, and then I'll send the full letter, and we'll verify this. Maybe sometimes if they're hourly and they have lots of different types of pay, we got to order a VOE, verification of employment, to use that overtime income, because we have to annualize that for 12 months. So one thing I see that I guess I would say is just be a little bit more patient sometimes, on the pre-approval. I do think that's something to mention. Another thing is probably using an LO that doesn't know what they're doing, because not all LOs know about VA, not all LOs know about these 100% financing, first-time homebuyer programs. So that can be a mistake too. If they might be super friendly, super cool, but they might not always know about all these different products and programs and know the guidelines in and out. So yeah, those are two things. But yeah,
As realtors, I mean, we all went online and took our classes and got licensed, and we passed our tests, and we're like, wait, this is not what I thought it was. Like, if you don't really know until you get licensed. And just so y'all know, I have my LO license and I don't know anything about the lending world. Like, I mean, we're always learning, and I'm always going, Quinn, what about this? Quinn, what about that? And so, like he said, just because they're licensed doesn't mean that they are knowing what they're doing, and they're an amazing resource.
Sure.
Okay, so I'd love to talk about, for me, I feel like we are inundated with lenders. I mean, every day I feel like a lender's calling me and wanting to sit down and have coffee. And I'm sure there's, processes and underwriting and things that are important to other people. But for me, I need a lender who's going to solve the most problems as possible. Like, if there's something messy and there's a problem, I know that lenders hate hearing that. How can I get that buyer who probably couldn't have been approved with guy A and B to the closing table? And something that George was talking about is how y'all will work with people with bad credit for free. Like, they pay for their little credit report, and then you really focus on building up their credit, and you can do rapid rescores and all kinds of really cool things. And we have a program that we personally will teach, like, bad credit classes. So, if you're a first time home buyer and you didn't think you could ever, get approved, this goes perfectly with that. So could you kind of touch base on what kind of programs you normally do for bad credit?
Yeah, definitely. So we do rescores. Well, when we pull credit for someone, we're not going to charge them for that. If a deal comes out of it at the end of the process, there is a small credit report fee, but for just your referrals that come, there's no charge for them talking to us and getting their credit pulled. We do credit rescores, rapid rescores. We do them all the time, and we've had a lot of success for them. Basically, what happens is if they're in that like 580, 590, they just want to get up a little bit over 620 or so, then I can see exactly what the bureaus want them to do, specifically catered to them, each individual bureau. And I can go over that with them over the phone, and then I'll email them a copy of it as well for them to read themselves. Sometimes it's things like pay off this credit card $500, or pay down this auto loan $450, or something like that. Cancel yourself as an authorized user here, or open a credit card. And I can send all that to them. If they do it within 30 days and can get me a statement or a letter on letterhead from the creditor that states this account has been paid down, then I can submit that to the bureaus on their behalf, and they'll be rescored 3 business days, 3 to 4. So we've had a lot of success with that. I love that program. I love that we can do that, and we've helped a lot of people. For those people that are kind of under 560, under 550 and below, I'll always give them that information. I'll always send it to them, but I would probably recommend them to a credit repair specialist that I work with, or someone that you guys work with if you'd like me to do that. Just because it's difficult to do a rapid rescore when they're that low. But if they're right on the cusp, or maybe they're at 620 and they want to be over 640 for that slightly better interest rate, we can easily do that. I've even done it when they're already under contract before. A cool story that happened. I had this couple that were really well qualified, VA loan, pre-approved them in January, 780 score, both of them, no derogatory credit ever. But they weren't ready to buy it. They had a couple more months. So they started to shop in April, and I repulled their credit. I said, okay, we do have to repull just to renew this pre-approval. And the girl, the wife, had missed some payments on her credit card, like 4 months in a row. What she didn't know is she had thought she had closed out that credit card, but they have a yearly balance just for having it that hadn't been paid yet. And so that was what they were reporting late each month. And it dropped her score all the way down to a 630 from 750 where she was. She had no idea. I worked with her. We actually got that score all the way back up to a 665, which got them a much better rate. And I do see now, apparently she got an automated update that it's gone up even farther since then. And that was because of what we did with rescoring, getting a letter from Capital One, and sending that into all the bureaus. They cleared it right up. It was really cool. So I love doing that.
That's so great. I always think like, oh, call me in 6 months, but apparently, and I've even had clients who are like, oh, I'll pay down my car, and they'll pay off their car thinking it helps their credit, and they spent 10 grand, but they could have spent like you said, $500 on paying down a credit card, made more of an impact. So it's really nice to have that second opinion.
Yes, definitely. I'll always go over and tell them where their money would best be spent to get the maximum impact on not just their credit score, but also the debt ratio too. Some people think, oh, I'll just pay this down, this down, this down, but the monthly payment for that might not be that high. Your money's better spent over here where the monthly payment's higher, bigger effect on your debt ratio. So I'm always going strategizing with that with people. I find it rewarding, honestly, when someone wasn't a yes originally and I can get them to a yes and then we close. There's nothing better than that. That's why we do all this, so the money's great, but getting that rewarding feeling is really what I'm after. So,
and for the realtors on this call, like that's so nice for us to know. Yes, we're not in the lending world, but we've got the basic knowledge to recommend, hey, here's a few options. Let me connect you to someone who knows. George was mentioning something about like, if you had a 550, which for me, I would not even call them back. But now they can, like, if they have some money saved up, I think 10%, they somehow can qualify for a loan. How does that work?
Yeah, so it's easier to get an AUS approval with a 10% down on FHA, especially if the debt ratio is kind of under 45%. If you're a little bit lower, if they do have good income, they just didn't take care of their debts. They didn't pay their bills all, we can get an approval for that. We can go as low as 550 on FHA. For that though, I do believe we would need an AUS approval. 580 is the bottom for when we're doing a manual underwritten loan, which is without an AUS approval, which, by the way, we have lots of flexible guidelines on that, and we do those all the time. But yeah, 10% down FHA, go as low as 550 as long as we get an AUS approval. And maybe we could go lower on the down payment too. It doesn't have to be 10%, but more than 3.5% can sometimes trigger that to be an accept through FHA. So yeah.
For the people on this call who have no idea, what is an AUS approval versus a manual underwriting?
Definitely. Yeah. Thank you for bringing that up. Automated underwriting system. So every mortgage lender in the entire country has the same AUS systems on their computer, one for Fannie Mae, one for Freddie Mac, and every loan that we do gets run through them. Whether it's VA, FHA, USDA, conventional, they're going to go through there. We read the findings, and that kind of decides what we need to get from underwriting. If it's a VA or an FHA, you don't necessarily need the AUS approval to do the loan, but it just triggers more paperwork being needed and verification of rent for the last 2 years to verify that they've made their rent payments on time. sometimes we can get away with other payments. If they don't have a lot of credit history, we can, Netflix is what we've used, cell phone bills, utility payments. We've really literally gone and used those things before. So, and we need a couple more bank statements. They may have to do a derogatory credit explanation, but we do them all the time. And I love that we have flexible guidelines on it. Before we merged with Annie Mac, just for y'all to know, OVM Financial merged with Annie Mac Mortgage, which is a larger company. Before we merged, it was difficult to get manual underwrites through. We had strict debt ratio guidelines, strict credit score. Now those are gone. As long as they're over a 580, we can go all the way up to a 54% on the debt ratio for a manual underwrite, which is unheard of. That's pretty cool. So yeah, just need a clear VOR, verification of rent, and we're good to go, and some extra bank statements. So it's cool.
So for most people in the lending world, like he was talking about these little boxes almost, you fill out all their information and it's like, if it turns green, you're good, I'll work with you. If it turns red, no, you're not good. And it's so cool to have someone go, well, let's look at this again. What can we move around? What can we change? Why is this red? How can we make it almost green kind of thing? So
sometimes they just need more money in the bank. Sometimes it'll flip green if we just tell the system, hey, they have 2 months reserves. And not everyone knows that. They don't know how to game the system with AUS. So, you know, in that case, you just say, hey, you're approved, you're conditional on, you got to have some reserves left over in the bank, but they can be a gift, you know, or they can be you can sell something, you can get a gift from mom or dad. So yeah, tons of ways to skin the cat.
Okay, so here's something that I feel like an objection that we come across all the time. A lot of people are staying in their homes. They're like, you know what? I bought my house at 2.9% interest. I don't love my house, but I don't want to go pay 6-7% interest somewhere else. A lot of them have been going, you know, maybe I keep it for a while, maybe I renovate it, maybe later I'm going to rent it out as my first investment property. What do you do in those situations? Do you say, no, please sell it, let's move on? Or do you say, no, let's really see what's best for you, and maybe we've got some renovation options?
Yeah, that's a good point. We do have renovation loans that we do here at OVM, VA, alterations and repair renovation loan, but also FHA and conventional. We do all of them. For someone who wants to stay with that low interest rate they have, and maybe they're wanting to do renovations on their home, we do have a home equity line of credit that we offer to a HELOC that we can get them in for that equity that they have if they're looking to renovate, but they don't want to refinance that mortgage that they have a great rate on. So there's different options there, but we do refinances too. We're happy to work with them. Yeah, there's tons of options for that. And I'm happy to work with those types of people, but we do VA renovation loans. They're cool. They're kind of hard to get through, but they're there. So
I love that. And a HELOC is different than a refi for people who aren't in the lending world. Like if that's a line of credit, they don't pay interest all the time. They just pay interest on what they pull out, right? Or how does that work?
Yep. They'll pay interest on what they pull out. Exactly. And usually, you know, it's 40 to 60K. It's a lot, you know, smaller of a base loan amount. The rates are a little bit higher for them, I believe. But it's such a small loan amount that the payments usually aren't that bad. So, and the value it can add to your home, you know, just with that 40, 50K investment can more than pay for it, you know, so.
Right. I've been seeing a lot of houses lately that are flips. Like a lot of them, you know, hey, I just listed one yesterday with like 220, but all the houses in the neighborhood were pretty and fancy and they were in the low 300s. And but the lady who's selling is like, oh, well, I don't really have a lot of extra money. I need this money, but she has a ton of equity because she bought it 10 years ago. So that's cool to know.
Yeah.
Credit, only pay on the interest of what you pull out, fix up your house and make an even bigger profit.
Yep, definitely. People are sitting on so much equity right now. I mean, with what we saw the last couple of years with home prices. So that's one of our strategizing that my team has been doing, is trying to reach back out to some of our people that we closed early on and saying, hey, you got a lot of equity there. You want a new bathroom? You want to refinance, pull some cash out, you know? So
we're staying in our houses. Okay, what about, I saw this on Facebook the other day where some guy didn't do his taxes, or I guess there's a lot of people now that apparently are not doing their taxes, or they're doing them later, they're deferred. And there's something called like a bank statement loan. How does that work? Is that
legit?
Yeah,
so There is a bank statement only loan that we offer here. I haven't done one yet, full disclosure, but they are there. How they're pre-approved is we get 12 months of bank statements. They don't have to do their taxes. We're not going to look at their tax returns. It's really for the self-employed people that may not claim a lot of income, but they still want to buy a home. So we're going to look at their bank statements, and we're going to look at all the deposits coming in and average the income coming into their bank statement. So back before I really knew much about this product, I thought that it was like, they have to have a certain amount of money each month, and we couldn't go under that certain amount for that house they're trying to buy. That's actually not true. It's actually about how much money's coming into the bank statement each month. And we're going to add up all those deposits and then average them. So yeah, it's based on that. It's based on how much money they have coming in. And they're seen as a bit higher risk. They are 25% down payment. So there's for someone who has a lot of cash ready. And most people, I think, would probably refinance them after a couple years because the rates are a little bit higher. Like I said, they're seen as higher risk. But that gives them time to show some income maybe next year and refinance into a more reasonable interest rate monthly payment for that. Another option, though, for those people that are self-employed that haven't shown a lot of income in recent years, is I'll take a look at what they have shown, and I can kind of help them, show them what they would need to claim next year in order to get the home that they're looking for. I just closed someone recently who bought an $875,000 home. And he hadn't filed for a couple years. And he messaged me a few months ago and was like, what do I need to show to buy this price point? And I told him, I was like, here's what you need to show. He was like, fine, done, let's do it. And he went, filed his taxes, got set up on an IRS payment plan for the money that they owed. And we pre-approved him and closed at the beginning of May. So that was really cool. We do that all the time for people that are self-employed. I'm happy to look at what they have done and show what they would need to do next year, to make that work.
Well, everyone on this call is a 1099 employee. And what's interesting is we go to places like, you don't even think you go to these high-end steakhouses or, different restaurants, and these people make so much cash every single night. And then they put that money in the bank, and then they claim their $2.25 an hour that they make on their checks. And, we forget sometimes that just because they're not on paper making that much money, that they're paying $2,000, $3,000, $4,000 a month in a fancy rental, so programs like this can get them into a mortgage.
Definitely.
That's so cool. Okay, so I have another one for you that George spammed me with, and I thought this was so cool. It was, and I kind of want to get your opinion on, who qualifies, is even worth the hassle, but apparently there's an FHA loan that is a $0 down program. And I wanted to know about that, because for me, when I hear $0 down, you have to either be like a special grant or you have to be a veteran, but it seems like with FHA, regular people could qualify for that.
Yeah, thank you for bringing this up, because we are so excited about this. This is a new program AnnieMac has rolled out, and it's in conjunction with another lender called Essex Mortgage. And so how it works is we're delegated to originate this product, and it's basically an FHA loan. That 3.5% down payment is a second mortgage, a second loan. So they're going to be, they're basically going to be borrowing both of them, and that Essex will service that second down payment loan. It's great because there's no first-time home buyer requirements for it. Unlike a lot of those grants, you don't have to be in the military. There's no income limitations, which those grants tend to have, those bond loans for each state. So the only limitations are we need AUS approval, that automated underwriting system. So we can't do it as a manual underwrite, but that leaves a lot of flexibility. We can go super high on the debt ratio, low credit scores. It's awesome. And I'm super excited to start originating them. I think I'm really going to, the people that I get from you guys in Texas, I'm going to work hard to get them in that program because it's awesome. And they really won't have to bring a down payment, just have to worry about closing costs. So how it works is that second is amortized on a 10-year schedule. So there is that. That's kind of the one kind of catch for it. But it's great. And it is just an FHA loan, no extra strings attached. So
they have 10 years to pay off their down payment, really?
Yeah, it'll be amortized over 10 years. And then if they sell their home before that, it becomes payable then. But yeah.
That's so think about like social media posts that we could do, because before it was either veterans, or if you were, if you made a really low income, you could qualify for a grant. If you make a certain amount of money, do you get disqualified from the zero down program?
Nope. No income limits at all for this.
So maybe do a post on, and maybe they can reach out to Quinn and find out what the details of, how to qualify, or if you have to have a job for 2 years or whatever, but say, I have this new program where you can buy a house with no money down, and everyone who, financially qualifies could qualify, no income limits.
Yeah. And we should have little social media graphics that we can put out too. So maybe later on or something, I'll show you guys the social media that we do. We can do a co-branded flyer, graphics, visuals that you can push out. I think they have ones for this made. They have little templates that they make for us. So if they haven't made it, they're working on it. So yeah, I'll check on that, but definitely.
Team Legacy one. That's awesome. Yes. If y'all have anyone that has good credit and a good job, but they just suck at saving money, call Quinn. That's awesome. That's a huge one. So those two,
it's awesome.
I had never heard of before.
Yeah, I hadn't either. I was like, what is this? Like, I actually was kind of skeptical when I first heard about it. I called up George. I was like, all right, what's the catch? Like, tell me. Right. And then we read through the guidelines. I was like, okay, the one thing is it's amortized over 10 years. So that payment is a little bit bigger, but it's not outrageous at all, and yeah, AUS approval and we're good.
That's perfect. That's good for people who aren't good at saving, but they can afford that monthly payment. That's huge. Definitely. Okay, I have one for you. Let's say someone is like, okay, I am going to sell my house. I am going to move. I have to move. I'm being relocated. What is your team's go-to strategy to stay competitive with these rates? Because I feel like every time I turn on the news, it's another quarter point. It's another, like the interest rates are always going up. And I'm telling my clients, it's okay. Let's stay in the market. But inside I'm going, oh my gosh, like, what is like the one or two strategies that we can talk to our buyers about? What could we do? Or do we?
Yeah. So the first thing I'll say on that is I have a lot of success with my realtor teams that kind of manage the expectations up front, that the rates may be kind of surprising, but we do price match. And what sets us apart is if you get something from another lender, we will do everything in our power to match it or beat it. And a lot of times, especially if they're like talking to Veterans United or something, we can actually beat them. We almost always beat Veterans United pricing, and we don't have to go very deep to do it. So something there. But yeah, so we do the price matching. We send out good faith fee worksheets if the client asks for them. And our good faith worksheets are extremely transparent. We have all of the pricing listed right there. I'll even go through it with them if they want. And what we're seeing a lot of times is these other lenders, they'll say, oh, there's no points. We're going to give you 6.5 no points or 6.25 no points, but they've jocked up their origination fee a lot. Or there's no credit report fee. There's no VOE fee. We don't have those, but they're just buried in an origination fee. And then you're not really seeing exactly how much they're really charging you for it. Wouldn't you rather have it all listed out for you and see exactly origination fee, this much, discount points, this much, down here, VOE fee, $8, credit report fee, $15. Like, it's all very transparent. And I appreciate that a lot about OVM and Annie Mac, because it makes it easier when we're talking to these people and we can show them what the lender controls versus what we don't control over here, title fees, taxes, things like that. I did see some questions come through. I think there was one about price matching a builder. It popped up on the bottom. We can certainly try. I know that sometimes builders have agreements with certain lenders where they really can go deep on those accounts. George has a few of those set up with builders himself that I've worked on. I would like to try. If we know what they're saying they're going to do, I can always work with management and see if we can match it or beat it. So definitely down to do that. Yeah.
If a realtor is trying to build a relationship with a builder, like we do builder move-up programs where, hey, we'll almost sell their house for free if you put us on the buy side. We want to build those relationships with these startup builders. If that builder didn't have a lender, would y'all be open to have dialogue and see if you can find a business to collaborate?
Definitely. Yeah, we've done those with builders before. So there's already the infrastructure in place for that. So yeah, we'd love that.
Awesome. Okay, let's see. How does a relationship with you benefit realtors looking for vendors? So we were kind of talking earlier about like, there's a million, just like there's a million realtors, there's like a million lenders out there. What should they look for in a great business partner? And how do you help as far as, growing our business or marketing? What's your play other than being overly educated on all these cool programs?
So we do have a lot of co-marketing abilities. One thing I would like to mention is we just hired a new marketing manager who's really wants to work with our realtor partners. She's hammered that home at our sales summit meeting last week that she wants to be filled. She wants her schedule filled. And she used to be an LO herself, which is really cool because we haven't had a marketing person that was an LO before in a while. So I'm happy about that. I'm super excited to work with her. She just got hired, I guess, last month. So we do that. Another thing I would love to tell you guys about is Annie Mac Works, which is a program where it's a partnership with our realtors, and they offer these online accreditations, these online certificates to differentiate yourself in the pack when you are meeting a buyer or seller. And it's all free to you. Just go through my link, let me know, and I'll send you the link and it'll be completely free. But I do have some of them set up on my desktop real quick. I'll switch you guys around and show you guys some of the ones that they offer. They have a real estate staging certification you can do, so you can post out that you've been staging certified. Here's a pet friendly one for those millennials and Gen Z people that are attached to their pets, a consumer credit designation so that you guys can have high level, credit conversations with buyers. Of course, we'll talk with them, but if you want to know some of the lingo and some of the jargon, you can sign up. Renovation lending for a realtor, so you can learn how those reno loans work. In addition to those ones, there are more. We have a cash to keys, which I'll talk to you guys a little bit about cash to keys in a moment. Let me switch this back around now. There we go. There's a cash to keys one for realtors, so you can kind of get an idea for that program, which is super cool. There's a farming Fridays you can sign up for. And I mentioned all this is free, so it's really cool. I'm missing one of them. There's a farming Fridays. I don't know. It's escaping me. But there's lots of cool different certifications that we can share with you guys, and to help not just with your buyers but your sellers too, to differentiate yourself. We want you guys to be competitive in all those ways and making money in different ways. So yeah, and then like I said, we have co-branded flyers we can do. I do have that set up here as well. I'd love to switch you guys around again and show some of these co-branded flyer templates. We have hundreds of them, but here are the ones that are the most popular. Cash to keys, buy now, sell later, cash to keys, cash offer, open house. And as you can see down at the bottom, there's a place for me and a place for you for our pictures down here. So you can push these out. And I would love to work on these for you guys and your team. I ask for probably about 24 hours so that I have time to get in here and make it work. If you are looking for one of these, which loan is right for your home? Here's one, a listing. So you can be co-branded if you want. If you want to be co-branded with a mortgage lender and get these done for you. Do's and don'ts when buying a home. And these are just the more popular ones. So we have tons more. If you're ever interested in pushing these out, I'm happy to do so.
I think the cash for keys would be really beneficial for people who, now the listings aren't just flying off the market and some people have to move. How does that work, and how could they market that? Do you have to get certified to offer that, or is that something that they can just do through you?
Yep. So to do cash to keys as a realtor, they do ask that you go through that cash to keys certification. It takes 20 minutes and there's a little quiz at the end, but it's like a 4 or 5 question quiz. It's pretty simple. It's just like a video you watch. It kind of explains what it is. And for you guys that don't know, cash to keys is a way to write an offer on a home without being contingent on the mortgage approval or being contingent on the home that they own that they need to sell. It takes away that contingency and basically gives them a bona fide cash offer that they can give to the seller that says, this mortgage company has already underwritten me. They've already gotten everything they need from me. And if it's in the case of they own a home and they don't want to be contingent on selling, they've already done a BPO, broker price opinion, on the home. They see that I have enough equity in it that it's not going to be an issue for me to sell. this home when I'm ready. So I can go ahead and buy yours, and they will back it up with cash from Annie Mac, which is a real game changer. I don't know any other mortgage lender that's offering anything like it. It does take a little bit of time to get pre-approved for, because all that underwriting happens up front, but it really is a cool program that we're excited to work on and excited to do. And you guys can use it as a selling tool. Most buyers at the end of the day, after they get everything, after they go through it, a lot of them won't actually do the cash to keys. That's what we're finding, is there is an upfront fee that's due from them that's credited back at the closing on their CD, but it's basically a 3% cash offer fee that's held in escrow. So they're basically paying those closing costs up front. That seems to be the thing that a lot of people are scared about, is paying that cash offer fee up front. And maybe they don't have the money for that just yet. But it is a cool program, and it helps you to differentiate yourself. And it'll also give you a platinum approval for that client, so they can use that to negotiate with the seller as well. That says, we've already been fully underwritten. This is a real deal, more than just a general pre-approval.
And then how long do they have to sell their house? Let's say they get moved into the new house. Is Ocean coming after their house right away for a discounted price, or do they have a while to try to sell it retail?
They do. They have 6 months to sell that home, and they can move into the new home right away. But Annie Mac technically owns that home until they sell their old one. And then they'll use the proceeds from that to purchase from Annie Mac and get their mortgage on this new one. So they do have 6 months. There is a daily rental interest that's accrued during that time frame. It's based on the pity payment, though, the mortgage payment that's going to be applied once they buy that home from Annie Mac. So they'll take that monthly mortgage payment, divide it by 30. That's the daily interest, and it won't become due until they purchase the home from Annie Mac. It'll be what's the word? I guess accrued over time. Yeah, and so that takes away them having to make 2 housing payments at the same time. They'll just keep paying the mortgage payment on the home they own till they sell it. Once they sell it, the same day they'll close on the mortgage for the one for Annie Mac, and that daily interest will become due at that point in time. But they'll have all those net proceeds coming in. So it truly is a game changer, especially for, what was that?
That's huge to market. I mean, before it was like, you might be able to get a bridge loan, or you might have to sell it to an investor, or you have to just figure it out, or contingency offers, which are a headache right now. That's huge.
Yep. So I wish we had it, during 2020 and 2021, when it was, when the contingency offers were never getting accepted. I do wish I had that back then, because we would have been using this nonstop, but we still are seeing a lot of traction for it. And it's cool. And it helps me because we get all that underwriting done up front. and then once the loan, once the deal is written and we're under escrow, it's actually a breeze to closing, and closing sometimes happens earlier. They order the appraisal on a rush. Everything's already in escrow. Everything's ready to go. It actually makes the under contract portion very smooth. So for those buyers that have their stuff together, that have all their paperwork, their pay stubs, their W-2s, and they have some money in the bank enough to pay their closing costs up front, or can get that quickly, withdraw it or get a gift, it's a great product for them and can definitely differentiate themselves and get them home that they really want. So it's cool.
I love that.
Got tons of flyers to push out for it.
Okay, I'm going to have one more question for you. That's huge also. If you're tired of competing against the cash people or contingencies, that's one that we need. The last one is, I was really overly impressed that, for me, I do a couple of VAs here and there. I would say 75% of your business is veterans. That's such a specific niche to be in. And for Texas, we bump into veterans. We would love to have more of them. A lot of us are still learning the lingo or the terms, or, do we really need the termite report? Do I still have to pay for that? What's going on? How are you finding these VA loans? Why did you specialize in that? Because that's something that I feel like we could all kind of add to our portfolio.
Absolutely. Yeah. I love VA loans so much. When I see that a buyer is VA, it's like a breath of fresh air. I'm like, oh, yes. Even though we do a lot of them, I'm like, yeah, this is what I can do. So, this is what I'm really good at. So we live in a big military area over here in Virginia Beach, Virginia. The largest naval base on the East Coast is here. So we just naturally have tons of Navy people, but we also have an Air Force base near not far. And there's Marines that come through. So that's kind of why we do so much here. OVM Financial was the top VA loan lender for this corner of Virginia, from Richmond to Virginia Beach. We close more VA loans than any other mortgage lender, more than Navy Federal, Veterans United. So we're really good at them. They're definitely the best loan on the market. There's no mortgage insurance for them. Obviously, there's no down payment. We can go high on the debt ratio, you can do a manual underwrite with them, low on the credit score, and good rates too. Really good pricing for them. We can go deep on the pricing for them. Absolutely. Some things we've done to kind of get more VA loans in the door is my mom's team, Shell's home team, has created this Facebook group called Military Spouses, I guess is what it is. And they have 12 to 13,000 members in there. And there are people that are coming, that are already here, that are PCSing. And we post a lot of just information about the area, fun stuff happening, stuff for kids, restaurants to go to. We let them post in there. It's open posting. We keep business posting on Wednesday. So on Wednesday, I'll post something. I'll put a flyer in there about the cash to keys, or about the new VA funding fee being reduced, or loan limits increasing for the VA. We'll do those on Wednesdays. But we also advertise. We had a military webinar that we do once a month for first-time homebuyers in the military, that we push out in that Facebook group, and we go live in the Facebook group for it. But we also hired an advertiser to push out advertisements for that. So we got a lot of traction on that military webinar thing. I think if you can get into the military space as a realtor, there's so much money to be made there. There's so much flexibility with getting the loans through and getting approvals. They can buy homes very easily with very little money. And that they're just a really cool spot to be in, a good niche, like you said. So
it's perfect. They all have jobs. They have to move. It's not optional. It's happening.
Yeah.
So I love their idea of creating a Facebook group or a community or a YouTube channel or something specific to their neighborhood. This is what it feels like to live here. Here's the restaurants you would go to. Here's the schools you would go to. Here's the parks that your dogs would go hang out at. So I think I would love to challenge all of y'all to just think about, what market area do you really want to farm, and how can you educate people from out of state? Because everyone and their dog is moving to Texas, to educate them on, you might like it here kind of thing. So I want to open this up for everyone. We have 13 minutes left. If y'all want to throw some questions at Quinn, he's unbelievably talented at making deals come together. I've thrown some terrible fires at him. He's great. So if there are any questions you have.
I will say real quick, while those questions come in, I forgot to mention for the pricing question you had, the interest rates. A cool policy AnnieMac has is, if the rates get better by 100 basis points after we've locked someone in, and they're under contract, we will unlock them and give them the option for a lower interest rate, same discount point, or a lower discount point for that interest rate. Different options there. So that's something that a lot of lenders don't have. And it creates that peace of mind when you're talking with a buyer and they're worried about the interest rate. I love letting them know that we have this policy. Granted, we haven't had to use it much in the past 12 months because rates have gone up, but it is there. So if a 2 days thing happened and the rate that the market changed and the rates dropped real quick for a couple days, we would absolutely let them know that and get them relocked. We're not going to keep them at that higher rate if the rates come down. It does have to be 100 basis points, which adds up to be around 0.5% or so on the interest rate. But it's pretty cool.
That's great.
Yeah, I'm super happy about that program we got.
So George had a question. I think this was on the cash for keys. How does the lender work with the seller on the sale of the home that they have now? And how does the loan handle the appraisal since it's a cash loan? There's still an appraisal, right?
Yep, there is an appraisal. They're going to order it on a rush for that home that they're buying. Now, for the home that they already own, the one that they don't want to sell until they've bought their new home, we're going to do a BPO broker price opinion on the home, they do have to have at least 20% equity in that home in order to pass that. If for whatever reason they weren't able to sell that home in 6 months, they just couldn't do it, which is, I don't know why they wouldn't, but if they couldn't, Annie Mac will purchase the home from them so that they can go ahead and buy the new one fully outright. And we would purchase it at that 80% of the value that the BPO has stated. So like kind of the worst case scenario for the price of the home. And then I believe at that point, Annie Mac would let the realtor sell it, I believe, is what happens in that situation if they have to acquire the home.
It's still not
really, I don't think that's ever happened in the history of Cash to Keys. It's just like what if, scenario. But they'll have 60 days, 60 months, sorry, 6 months to sell it, and can stage it as much as they want, be as picky as they want during that 6 months time frame.
That's plenty of time. And even 80%, I know that sounds terrible, but in my investor world, 65 to 70% ARV is what we offer. So, I mean, as far as cash offers goes, 80% is still really high if you have someone who wants to just get rid of the house.
Right.
Good question.
Yeah. This is a cool program, which has lots of ins and outs and lots of stuff about it. And I have my notes written down somewhere. So if people are really interested in talking about it more and getting that realtor certification for it, let me know, text me, call me, and I'll set up a phone call with you so we can go into a bit more of an in-depth discussion on that product for sure. Perfect. Oh, George sent a text. Awesome. I'll respond, George, as soon as we're done here.
These programs, I love the pet friendly one. Like, I think these programs are a way to stand out because there's so many realtors in this market and there's such little inventory that we need to take advantage of anything, especially if it's free.
Yep.
Any other questions for Quinn? I swear he's nice. You can throw anything at him. He won't bite.
I'm just so thankful to get to be here and talk to y'all. Thank you, Amanda.
Oh my goodness, thank you. His team is always like, how can I bring value? The bank's open. Like every Friday I get a text, the bank's open. We'll work this weekend.
Yeah, we're available on weekends, definitely. We have an app. One more thing I would like to say is we have a mortgage approval app that I really like to use. George is more the old fashioned. He'll call them up right away and do it that way, which I can do too if they want that. What I like to do though is call them, say, hey, how's it going? I'm Quinn. I'd love to get you pre-approved. Will you fill out my online application? And I'll send them that link. They can either download the app or there is a way to do it without downloading. And they can fill out that application online. And that takes a full mortgage app. They can upload their pay stubs, their documents. We'll pull credit. It's a little bit more accurate, I'm finding, because it gets the full 2-year residential history, the full 2-year employment history, which can be difficult to do over the phone, and then I'm texting them, oh, I forgot to get something. Oh, are you married? Things like that. This gets all the info straight away and we get notified, and I can put realtors in as a partner. So the realtor could know as well if they're filling out the app, if they're using the mortgage payment calculator in there, which it does have that as well. You'll automatically get a little notif saying, hey, so-and-so Joe is playing with the mortgage calculator, or hey, they're playing in the mortgage app. So it goes to both of us so we can reach out to them and ping them. I do like to use that to do my pre-approvals. If there's someone that needs it in 30 minutes though, if it's a 5-alarm, you're writing an offer tonight and you need to know if they're pre-approved, I'll definitely do it over the phone if that's the case though. So we have those different options. He
was in a cabana in Mexico writing approval letters. Like we joke, if you want to get busy, go on vacation. But I'm telling you, he's always super available for us.
That was fun.
So y'all have Quinn's cell phone number. Oh, Lilina, you have a question?
I see that yes, sorry. I see that George had a question regarding the type of loan, the cash loan that we yeah, so George has a question regarding like how does the loan handle the appraisal since it's a cash loan, and I'm questioning on that too.
Yes, yeah, I think we just went over that. So you'll get a BPO for the house that you actually own, and you'll get an expedited appraisal for the house that you're buying.
Okay,
Yeah.
sorry. missed that part.
That's okay. No,
No-
they do
no
it really
worries.
fast, so you can close
Yeah.
really.
I talk fast, so I'm sorry. And it's conventional and VA, not FHA. We can't do cash to keys with FHA, unfortunately, but VA and conventional, definitely.
Government loans. That's
Okay,
amazing.
so I know that the contract has been updated on the financial part where it asks if you are going through a lender, no matter what, you will still have to state it as a third-party lender instead of a cash loan. So does it affect does it play into this type of loan or?
It really is a bona fide cash offer. There's an addendum states
Oh.
that no matter what, that home's being bought, whether the buyer is able to sell his home quick enough and buy it outright himself with one closing, or if he or she opts to hold on to that home and sell it after they close on this one and move into this one, in which case there's a 2 closing scenario. But it's happening. That addendum guarantees it. Cash to Keys is putting their money where their mouth is and saying, we believe this will go through. And if it doesn't, we'll buy it. So
Okay.
yeah.
If I'm making that cash offer, how fast can I, because there's kind of I guess a lender involved, how fast can I offer to close? Is it as fast as a cash deal?
I would
Like a week
probably,
or two?
I probably put it at like 15 to 20 days.
Okay.
I don't think a week. They haven't said
Appraisal?
that it's going to be as fast as a cash offer, because we do still have to get that appraisal in, but they will order the appraisal on a rush, so I would say it's quicker than your normal 30 days. But I don't know if I would write it for a week either. I would probably do like 2 weeks for it. Yeah.
So Tyrone, if you want to message Quinn, I'm sure a lot of people will, he's going to send over that. So Tyrone would love the info about the 0 down FHA product. I think that's so brilliant.
Okay.
So you kind of finance your down payment. So many people who don't have that money saved.
Yeah, that's awesome.
Awesome. We all reach out to Quinn. He does a lot for Team Legacy. He brings value in so many different ways. We've teamed up with him. We're doing Team Legacy scholarships, and we're doing lots of things to pour back to our charities. And all of that is through OVM. So they have a special place in my heart, and I love that they're helping us close more deals. So thank you, Quinn, for being here. We do this every single Tuesday at 10 a.m. and this is just unbelievable. So we appreciate you.
Awesome. I'm happy to be here. I'm happy to meet you guys. Thank you so much for listening to me babble.
And if y'all are free later today at 2 o'clock, Mikey is doing his listing presentation. So if y'all want to learn how to do a listing presentation today at 2 o'clock, hop on. But Quinn, you're amazing. I can't wait to do business with you, and we'll see you soon.
Okay. Thank you. I'll reach out to you guys. Have a good one.
Bye.